Never lose money in Forex again or make 599% gain on an account with this secret technique. Well, this definitely sounds promising, so let's actually backtest this trading strategy to see how much profit we could really make with it after 100 trades. For my backtesting, I will set my account size at $1,000 with 1 to 1.5 risk-reward ratio. Okay, we're currently looking at the price of GBP USD on a 15-minute time frame, and this strategy consists of 2 free TradingView indicators. For the first indicator, let's search for hold trend. And select this indicator right here. Okay, now we need to access its settings and make a slight adjustment in the style section. For the second indicator, we will search for bottom buyer. Alright, now let me briefly explain how these indicators work. First, let's start with this hold trend indicator. This is a lagging indicator that helps traders identify the overall market trend. It looks something similar to Ichimoku cloud and Bollinger Bands. We see it consists of the cloud that changes color depending on the trend direction, and the bands that help traders identify the overall volatility in the market. And the second indicator we've got on our chart is this bottom buyer. To me, this indicator looks like a slower version of the stochastic RSI. This tool basically helps identify the overbought and oversold areas. If the bars get colored in light green, this is a strong signal that the buyers are stepping into the market. Exactly opposite is true when the bars get colored in red. This means that the market is oversold and the price is more likely to reverse. Okay, now let's understand the trading rules for the strategy. Alright, so here are the conditions for entering a long trade. First, the bottom buyer indicator has to turn light green. Second, the whole trend has to be colored in red. Third, we need to have at least 2 consecutive bullish candlesticks while the bottom buyer is being green. And only when we have these conditions met, we can safely enter a long position. Our stop loss will be set at the lower grey band. And we're going to be targeting 1.5 times the risk. Exactly opposite is true for short trades. First, the bottom buyer has to be red color. Second, the whole trend cloud has to be green. Third, we need to have 2 consecutive bearish candlesticks formed in the market while the bottom buyer is being red color. Our stop loss will be set at the upper grey band. And just like with the long trades, we're going to be targeting 1.5 times the risk. We can clearly see that this is a reversal trading strategy. In my opinion, it's quite risky because we're going against a trend. Here are some examples where you wouldn't have entered a trade. Here we see the bottom buyer turned green. We have 2 bullish candlesticks in a row, but the whole trend is being green color. So in this example, the conditions are not met, so we simply skip this trade. The same situation we have here. We see the bottom buyer became overbought. We had 2 bearish candlesticks in a row, but the whole trend was colored in red. So in this case, the conditions are not met and we're simply gonna skip this signal. Also notice that 1 candlestick later we had another 2 consecutive bearish candlesticks, and this time the whole trend is green color. So the question is, would you take this short trade? And the answer is no, you wouldn't, because you need to have a new short signal from the bottom buyer. This means that the histogram has to turn from red to orange, for example, and then turn red again. We see the goal with this strategy is to avoid a ranging market like this. Notice that the indicator stays gray all the time. But once the market starts trending, we see the indicator gives pretty accurate signals. Okay, I hope you have understood the rules for the strategy. Now let's do our backtesting to find out how much profit we could make with it after 100 trades. Okay, so the backtesting is finished and the win rate for the strategy is 52%, and we increased our account size by 76.35%. Obviously these numbers aren't anywhere near the numbers promised in the video, but the strategy is definitely making money. The profit factor for the strategy is 1.63 and we had 5 consecutive wins against 6 consecutive losses. So the strategy is quite risky, as I said, and it's mainly because we're going against the trend. You might be asking, is there anything we can do to improve the strategy so that we get better results? And the answer is yes, there is, and this is exactly what I'm going to be doing in the second part of this video. First, I will try to increase the win rate for the strategy to at least 60%, and second, I will try to minimize the drawdowns. And in order to do that, we definitely need to change the whole concept of the strategy. So the first step will be to remove this bottom buyer indicator and add an indicator called ADX with DI. We're not going to make any changes to this tool, and the reason I added it to the chart is to spot better trade entries. With this strategy, we're not going to be catching any reversals, which will maximize our chances of success. So the rules for entering a long trade are simple. First, the overall trend direction has to be bullish. This means that the price action has to be closed above the whole trend cloud, and the cloud has to be green color. Second, the ADX blue line has to cross above the 20 level. At the same time, the green line has to be above the red line. And the last condition will be to avoid taking any long trades if the price action is closed above this upper grey band. Okay, here we see the conditions are met and we can safely enter a long position. You can either set your stop loss at this middle red line or at the lower grey band. It totally depends on the volatility in the market. If the volatility is high and the bands are really far from each other, you will normally set your stop loss at the red line. But if the volatility is low, you can place it at the lower band. The take profit target will stay the same. Exactly opposite is true for sell positions. First, the price action has to be closed below the whole trend cloud and the cloud has to be red color. By the way, you cannot be taking any trades when the price action is closed inside the cloud. Second, the ADX blue line has to cross above this 20 level, while the red line is being above the green line. And third, the price action must not close below this lower band. Just like with the long trades, our stop loss can either be placed at this red line or at this upper grey band. Our take profit target will be set at 1.5 times the risk. Also keep in mind that when the price action is making massive moves like this, and then the ADX indicator catches up and gives you a signal, it's always better to avoid signals like this even if all the conditions are met. This scenario doesn't happen that often, but it does happen every now and then. Here we see we had a massive bullish momentum, and then the indicator caught up and gave us a bullish signal. And again, if you had taken that trade, it could have resulted in a loss. Also notice how well this lower band eliminated this losing short trade. We see the indicator gave us a short signal, but the price action closed below the band. This means that the price is overextended and we cannot take this short trade. Okay, I hope you have understood the rules for this strategy, so let's do another backtesting to see if the results are any better. Alright, so the win rate for the strategy has increased to 64%, and we gained 220.42% of profit on our account, which definitely tells us that the strategy is working really well. The profit factor is 2.67, and we had 6 consecutive wins against 3 consecutive losses. So yeah, pretty amazing results with only 2 indicators. You can definitely try to add another confirmation indicator to the chart to eliminate even more losses. If you have no idea what indicator to add, check out this playlist right here. This is literally my collection of the best TradingView indicators.